Alright, hi guys, welcome back to PKFX YouTube trading channel. So this will be a very quick trade update on a trade that I just entered, Euro USD, based on the weekend game plan that we discussed previously. So we were planning to sell Euro USD, and the reason behind this was because for the weekly, right, despite the fact that the weekly is bullish and this is a counter trend sell trade, right, the reason for entry is because we actually saw, if I zoom in over here, we actually saw a very strong bullish engulfing candle that kind of stopped right below this weekly EMA, making this area as a potential resistance for it to break because it did not close above, it actually closed below, right? So this box over here as well, this area now becomes a resistance for me on a weekly perspective as well. So despite the weekly being bullish, I decided to go ahead with a sell that matches equally to the daily bias, whereby this is the lower low and this is the lower high. So technically the daily is a sell, and when the market pulled back the last day when it closed, it created this very strong doji indecision candle, whereby we always say that whenever we see a bullish push and then a doji candle, usually it follows by a bearish reversal candle. Not necessarily it's meant to happen that way, but I do see this kind of pattern forming pretty often. So this is going by the decision based on the location and the exact position where the candle is. This is showing me that it is curving here, rejecting this particular box, showing that this area is a potential resistance and market should have some sort of a push towards the downside. Now I do understand that the daily EMA is now coming down here that can act as a support, and this push over here can come back correct over here and continue the push towards the upside, and if that happens it's probably gonna hit my stop loss. But if I go down to the 4-hour candlesticks as well, I see that the market tried to break above, right? It was not a significant break above this box. It actually came back down again. So I was waiting for an immediate 30 minutes shift of structure. So by right, I could have considered this place over here as the location where the structure point is going to be broken, but I took it all the way down here and I called this area the area that I wanted to break. And to be fair, when this candle closed, it kinda broke below, but I did not enter immediately. I saw a potential pullback, and that's what happened. And then on the curvature over here, that was my entry signal. That's when I decided, you know what, the 30 minutes has already shifted from a buy into a sell. It made some sort of a retracement, right? And then it's now curving back down into a potential engulfing candle, which will indicate for me to enter the trade. And if I go down to 1-hour candlestick, this was the engulfing candle. And to be fair, I did not enter the trade upon closure of this engulfing candle. I still had about 26 minutes before this 1-hour candle closed. Therefore, I entered immediately because I could see this pattern forming. The right thing to do was to wait for the candle to close, because despite the fact that it was forming an engulfing candle, having 26 minutes balance on this candle could easily change this into a wick and a push towards the upside. So I did not consider as a confluence, I did not consider the engulfing candle as a confluence. I just considered the shift of structure as one of my confluences in order to enter the trade. So ideally I should have waited for the candle to close, and somewhere around here should have been my entry point. Why did I enter earlier? Because at that point of time when I saw it was literally just pushing towards the downside, and I thought, hey, you know what, if I go back to the 30 minutes candle, right, it may just break past through and keep running, and then now I'm missing the 1 to 2 risk to reward. So that was a little bit of I would say fear of missing out that took place over there, but I documented that in my journal accordingly. I did mention that I did not entirely wait for the engulfing candle, and I just entered based on the shift of structure. Therefore my confluences was not really meeting it, but I was still following my strategy for the shift of structure to enter. right now the market is somehow trending towards the downside. We are not out of the woods yet. We do not have a clear break towards the downside. In fact, market barely trying to break the 1 hour EMA. If I go back to the 4 hour, I still have a long way to go, and I see the 4 hour EMA is also climbing up. But I'm going to continue to hold because my stop loss is placed in a position whereby if the market reverses and breaks and pushes towards the upside, most probably it's going to continue to rally towards the upside, right? I place my stop loss in a place where if it hits, I'm completely wrong about the direction. But if it's not going to hit, then I'm expecting it to push all the way to the downside for a beautiful 1 to 2 risk to reward. So let's see what happens next. That's Euro USD. That's the sell that I took. The other pair that I was actually interested to enter and I did not enter was USD JPY. And well, currently, to be fair, it is actually going on in profits. I did not enter this trade simply because I did not get a shift of structure. This was the 30 minutes lower low and this was the 30 minutes lower high. And for me to have a shift of structure, it has to break above this structure point. But by that time, the TP is already hit, right? So it was not a valid trade for me. I tried to go down to the 15 minutes to see if there is a potential shift of structure, but still, this is the lower low, and over here, this is the lower high. So I cannot get a decent shift of structure for me to enter this trade. And without a shift of structure, I do not want to enter a trade. No shift of structure, no trade. So I kept to my rules. I decided not to enter this trade. I know that I could have entered this at a different spots over here and be on a good profit right now, but that would be pretty much trading based on instinct. I don't want to trade based on instinct. I want to trade based on a proven strategy, and my strategy says that I gotta wait for a shift of structure before I enter, and if possible I gotta have an engulfing candle that further affirms the direction before I enter, and I want to hold on to it. And if I'm going to be taking this sort of trades based on instinct and not based on strategy, then there's no point in journaling, right? So therefore I did not enter this trade. I'm going to just continue to monitor this trade, see how it plays out. Just because all USD JPY pairs are heavily sold, I believe this trade is going to hit the TP anyhow, because if I go to the weekly, it is kind of showing that it just ended up as a huge wick, and the weekly EMA is now holding, unless some sort of a news comes out and then it dumps further, yeah. But otherwise, I think this is going to hold and probably slowly recover towards the upside. This is what I see potentially happening in the next few weeks. But yeah, that's about it, guys. That's the quick update. Euro USD sell. Currently, I'm holding. No other trades so far. I'm going to continue to hold and see whether this trade hits my stop loss or take profits. All right, guys. Thank you so much for your time, and have a good day. Take care.